What's going on, everybody? Hope you're doing well. My name is Lamont. I've been a full-time trader for 7 years now, part of the Chart Guys team for half of that, where I head up our futures room and our swing report. In this video, we'll go over the overall market, hit you with some trade zones, cover some of these hype sectors, update you on some prior zones, and maybe do a little bit of a tour for the swing report. So that's pretty much it. Let's get into it. Okay, so the market pretty much spent this entire week just balancing within this all-time high supply. It's a very healthy consolidation, and as of right now, the buyers are in really good standing, but as we know, things can always change. So while this looks totally fine right now, and the buyers are continuing to chip away at the supply sitting in this structure before all-time high, if we were to get a scenario where, let's assume that maybe this is the rate cuts being priced in, right? And let's say that there's one more exuberant push up if the rate cuts do come in a manner that the market, well, I mean, the market's pretty much priced at 100%. So let's say that that does come and this was the price in, then there is the potential for a pop and drop scenario where we break to an all-time high and then don't see follow through. If that were to happen and then you pop over this local demand, drop right through it. First of all, if you pop back over it without any follow through, you should expect the lows of the range to be tested, which is already what's happened many times. Here is a higher high, right, relative to this balance, test the lows of the range. Here's a higher high relative to all of this balance, no follow through, test the lows of the range. Here is a higher high. So whether or not it's going to see follow through, we don't know yet. But even if we were to see a big old pop into new highs over 565.16, it would be a red flag for us to come right back down into the structure. Very similar to what IWM, RTY did back in the day over here, right? Where you had this very lengthy balance, big old breakout, no follow through, come back down, trade to the lows of the range, can't get back over them, and then you roll over. So, for me, I'm just always, it's not a prediction, right? It's just whenever you see a setup like this that just looks like almost too good to be true, you should be kind of mindful of the potential of a fake out. We don't predict. I have no idea what's going to happen. No one knows what's going to happen. If you listen to somebody who does claim that they know what's going to happen, you should probably not listen to them, or maybe don't take it so seriously. So anyway, if we do get that pop and drop, or even if we just drop, let's say we don't pop, we just drop and start consolidating, as long as these buyers can hold over this structure from 724 to 81, then the consolidation will be healthy, because on the weekly time frame, you have a lot of space for a potential higher low to be set over 510.27. So that is really it for the SPY. I think our zone was down there as well, I believe. I think that was it, right? That was it. I still maintain that this is kind of where you want to be looking for value trades, right? Like, can you be aggressive in here? Are there aggressive trades to be had? Of course. And we do that all the time in our chat room. If you're interested, links in the description below. 1,000+ traders. We're here every single day. Even on low volume holiday days, we're plugging away. Check us out if you're interested in finding a community. If not, that's cool. Keep watching. Hopefully you get something out of this video. And if not, then well, I guess stop watching, right? I don't want to waste your time. So anyway, that is pretty much it. I still think over here, if you have extension on the hourly, very reasonable area for a trade. But I will say, though, that bigger picture, I am open to the potential. I'm very open to the potential of just seeing some longer term balance, right? Because, after a major breakout, very often those gains will get consolidated, which is not really bad, right? So here, for example, you have a pretty big breakout. This breakout, they try to consolidate. This is COVID, but here's the breakout, and then you consolidate those gains before you advancing, and then eventually you come back down to retest these highs. This is just simply what the market does. For example, the COVID low was really just a backtest of this area of sideways. So even if the market were to continue to rip higher for quite some time, and then we were to see some volatility come back down, so that would be like this. Even if we were to come back up, see some volatility, as long as we hold over this 2021 high, that means that higher prices relative to this structure are still being accepted, and bigger picture, that won't be a big deal. All right, I'm very open to this kind of price action. It could very easily happen. We shall see. There are certainly some cracks in the armor that are starting to show up with like the jobs numbers not looking so great, and Jerome Powell did signal as well. I forget his exact phrasing. It was something like, we would not welcome, the Fed would not welcome more softening jobs numbers. So clearly that's their issue now, right? Obviously inflation, not obviously, but inflation is now more or less under control. It's not at their 2% target, but it's gotten to the point where it will likely get there. So inflation is no longer their challenge. They're probably focused completely now on jobs. And the issue with that is, well, you know, if the jobs numbers start falling apart, well, that's a recession, right? And so if we do go into a recession, then of course the market is less likely to perform well. It's unlikely to perform well. All right, so that's pretty much it for SPY. Moving on to the Qs here. So Qs showing you some relative weakness, right? With the SPY, you only have that all-time high structure in the way, but the Qs, they still have this guy that they need to work through. So this consolidation is still healthy. I think this is notable. If you'll recall last week, what we were talking about was, all right, well, if we do start to see some retracement here, excuse me, I'm a little sick. If we do start to see some retracement here, the best case scenario would be to not fill this gap at all, right? The next base case scenario would have been to hold the value area high test of this structure here, the same 724 to 81 structure as we were looking at in SPY. That would have been the next best case scenario if they were to test the value area high and then not see follow through down, because then that would mean that we don't fill the gap, right? And so that's kind of what happened. It's actually a little bit better than that because they failed to touch down on the value area high. So the low of this session was at 467.89 and the value area high was at 467.42. So that is pretty much it, right? As of now, if these buyers can continue to find acceptance over this low here at 473.82, well, then that's going to be pretty much the best case scenario going forward. Basically, they want to get back to finding acceptance within this guy to stay positioned well to have a go at this guy, because of course, if they overcome all of this supply, then it's on to new all-time highs. And we don't usually cover the other major sectors, that's finance and healthcare, but I do think that it's notable to consider them because they're both just ripping to new highs. This is healthcare, this is finance, and basically, because these two major sectors are pressing into all-time highs, if the market is going to continue to see healthy rotation, then once these guys start to consolidate, if QQQ starts to see strength again, that's going to keep the SPY, the overall market, happy. Okay? So that's pretty much it. The next key levels next week are going to be 480.91 and then 482.51. I think we had a conservative trade zone. I don't think it came down into it, just missed us. We're looking for a potential test of this point of control here if the hourly was oversold, and I don't even think it did get oversold, but it just didn't come down into our location because, well, these videos are always going to be a bit conservative. That's just how they have to be because I only see you once a week. So that is it. All right, let us get into the Dow. So the Dow also obviously did not pull back into our zone. Broke to new all-time highs again, and really, there's just not really that many red flags out there, okay? So as of yet, I don't really feel like there's any major concerns. Just, again, as long as we're holding over those 2021 highs, as long as we have space for a weekly high or low especially, no big red flags in the market right now. So at this point now, I think we can bring that back. Honestly, I would still prefer it right here, right? Because this is a area of supply sitting on top of all of this sideways action here. And you can see how the buyers tried to use it as a step up and try to be constructive after that, but failed. And now they're making a lot more space to potentially hold over this structure now. So this is still where there is good value. I never know whether or not these assets are going to come into our trade zones. What I do know is that it is cheap to find out if we can take trade in here relative to what the potential reward should be. So that's really it for the Dow. Moving on to the small caps, IWM. So I did a pretty good job trading this last week. Again, if you want, you know, a community to trade alongside, pop into our community, check it out. I always do live trades. Not always. I very regularly will do these live trades in the room. So I'm right back to being a buyer in this guy now because assuming, again, if it's not your first time, then you know I've been talking about it for a long time. Theoretically, rate cuts should benefit the small caps more, all right, because they carry much more debt. And if the market rally is going to broaden, then it should see some capital inflows into the small caps. Whether or not that's a dash to trash to mark a cycle top, we never know. But as of yet, this is actually quite notable because recall that this is the key supply that was sitting in the way, right? This was the problem for buyers over here. They tried to hold over the point of control and get constructive, and they failed right after they filled the gap left behind from this session. And then they fell back down into that no man's land. very, very notable V-shaped reaction out of the no man's land, and now making a lot of space to potentially hold over this key structure from the Q1 of 2021. That's this guy over here, which made all of these lows right here, which made a bunch of highs over here, bunch of highs over here. And so I was most interested in taking plays down there, but this was juicy enough that I just started playing last week for buys, playing off of this point of control, targeting this value area high, which I actually realized I should roll those proceeds now into IWM. I typically will day trade. I mean, they're not much because I was doing the smaller contracts as I practice a new technique. Anyway, I digress. Daily higher low has been set at 212.67. Key resistance is now 222.45, and the value area high at 222.28 is going to be super key. You can see how I have the alert set there for an exit. Although it already stopped me out, but it was fine. They were profitable trades, just not really. They were just okay trades. But I'm just gonna get back to focusing on the buy, because as long as they're chipping away at this supply, well, then that means they're positioned well to have a go at all-time high. So we shall see. This trade idea, you know, it's starting to feel a little bit shakier with the jobs numbers fundamentally, but technically it's still exactly the same. So just gonna keep sticking with it. I don't know that we did a conservative trades that didn't come back to this. I maintain that this is a very reasonable area to be looking for trades, because again, the idea is you want to hold over this structure. If you hold over this 2021 structure from Q1, then they should be chipping away at this. So it's just a responsive trade looking for balance within this guy. All right. Okay, so the dollar, finally one that hit for us. This trade zone was established like this because we know that this is the key demand zone, this is the key supply zone, has been containing price for many, many years. I'm getting really tired of saying that, but that is the reality of it, and we have to always call things for what they are in the moment. So I stand by this trade zone. I still think it makes the most sense. If you guys recall, we were talking about the potential of us to see a little bit of consolidation here before breaking down under this level, and that if we did see that consolidation, that this should be more or less easy work, which it was. However, the buyers have now defended against this key demand zone, bouncing out of our trade zone no later than 101.965 should a dollar buyer be looking to de-risk a little bit, assuming you front load all of your risk, because this is the area of no change, 101.965. Again, buyers create no change without getting back over it. So if you are able to chop it up, throw your stop under this low, the next exit probably should be in the middle of this range where the volume really picks back up. One more partial exit if you can afford it at the extremes of the range. And then after that, you know, if the dollar can break out, then just hold on to the runner for any dollar traders out there. But we're just continuing to balance as long as there's no acceptance under this guy. All right. Moving on to the VIX here. So the VIX is starting to make its way back under the 1544 level, the 1544 level being the pretty much line in the sand to assess whether or not we're going to continue to do what we've been doing since the October low. So the best case scenario for these asset buyers would be for the volatility index to fall under 1544 and continue to find acceptance under it. So just continuing to watch that. And that's really it. If we do happen to get some massive selling, it's very early, but if we were to get some massive selling, I'm talking about like 2 months worth of selling, then I'm interested in a potential VIX play. Moving on to NVDA, that's nothing. So NVDA, if this guy already came into our trade zone and bounced out of it, hitting our target. So I still think this is a very reasonable place to be playing, especially if the daily and the hourly is oversold. Looking to backtest this guy. As long as we're holding over this area of demand, bigger picture, these buyers are totally fine. There's a lot of space for a potential weekly higher low to be set. Anything over 90.69 is going to be good for one. And so I think this is still fine. You'd have daily oversold conditions, you'd have hourly oversold conditions in here, so a very reasonable place. Daily chart now does have space for a lower high to be set under 131.26. Anything under that's going to be good for a lower high, and this is now our new daily no change level here. 123.10. As long as these sellers can buyers, cannot get back over 123.10, then the change of this breakdown does not get negated. All right, that's really it. I'm dying internally. My throat is killing me. Sinuses are. Anyway, that's pretty much it for NVDA. Moving on to Bitcoin here. So for Bitcoin, I was interested in a potential higher low off of this point of control, but I just didn't like how deep it got because the risk was going to be not so great. So I ended up not doing that. And I think we set this alert together last week, where ideally we would see a pop and drop over here. So another test of this key structure, which is the little bit of balance that was made on this one-way trade up into this forever balance, right? And so if we were to have extension, I would have preferred one fell swoop down into it, but I'm still open to this play. If you get things really beaten up, like let's say this happened, let's say we move back up over here and then drill down under the structure, get all of these guys rather extended again, then we pass back over it, fair enough. I'll look for that pass back over play. And I did get a question from the community member. I haven't had a chance to answer it yet, but the question was, when are the pass back over plays valid? Validity is not really a thing that I like to delve into, right? It's more so about like, because validity is so binary, right? It is or it isn't. That's, you know, like that's, life is not like that, right? There's much more nuance to it. So, you know, things don't fit perfectly into squares or whatever. The way that I see it is, as long as there's extension into that level, the odds of that level holding are diminished. And so looking for the pass back over play is reasonable. Like if you were to do that here when things were very extended, you buy this move back over it, you throw your stop under the low, you'd have to assume 6% risk and you would have to sweat a little bit, but it does shake out fine for you. It's, the validity is not something that I care to do. It's like confirmation. I don't care about confirmation. Confirmation is not a thing. You know, it's not a thing. Even, you know, marriages get divorced, contracts get broken. There's no such thing as confirmation. There's only affirmation, right? As we get more and more information, which one of our theses are being affirmed. That's what we care about, because we lay out all of our theses for up, down, sideways. And as price action continues to affirm or negate one of those ideas, that's the one that we start. Well, if we affirms one of those ideas, that's the thing that we start playing for, not knowing that it's going to work or not. Validity is like not a word that I care to use often in trading. Anyway, that's pretty much it. I'm just looking at this as forever balance as long as we're over this demand zone and under this supply zone. All right. So that's it. Daily lower high, lower low, no follow through. Pretty much another perfect rejection right off of this point of control. Again, affirming that this all-time high structure is significant and this prior all-time high structure is significant. As long as we're holding over the point of control of it, which we are not right now, this structure is being affirmed as demand. Okay, so goal for the buyers is to get back over 61003.36 in the short term. And again, I'm not really too excited about trading crypto. There's a lot more going on in other sectors. I was okay with it here because it looked like a potential flag that might see follow through, but now we're just doing this forever balance again, so it's less interesting to me. Ethereum is showing you a lot of relative weakness, cannot break back into this key supply that's been left behind. That's really it. I'm still just watching these same key structures. This guy as our lower downside reference, these as our upside references, and then this fella down here, which is really just sitting on top of all of this demand, which is why we're watching it. So man, I might not even keep covering this. It's like not a very attractive trader in my opinion right now. Not a very attractive asset, I should say. You know, if we get another shot down here, get things beaten up again, another pop and drop and pop over here, I would be interested in that. But other than that, I don't really care about Ethereum right now. Daily lower high has been set here at 2597. Trying to set this higher low here at 2430.25. Got to break over 2551.26 in order to do so. I need to break over 2597 for a daily trend change. A daily trend change up over this point of control would be notable. Should have these buyers trying to get over here. So let's measure that risk, I guess. I don't love it. But that's it. CCJ, it looks like CCJ is doing their best to hold on to this fellow over here, but I am very open to this kind of price action occurring, so I would not be surprised if we were looking at something like this. A move down from the highs, right? Big old bounce, a lower high down to a lower low. So I still continue to maintain that this is where I want to look for some more position in CCJ, just because we're back to working on this guy. This guy over here, we're back to working on that. So if these buyers can continue to maintain over 38.87, then the seller should be trying to come back down here. And this is potentially just a weekly lower high being set at 44.45. Got to break under 40.15 next week to have confidence in that lower high being set. And technically there is a little bit of space, or there is a decent amount of space for a higher low to be set over 35.43. So that is really it. Just staying patient on this, and I only want the trade exactly as I want it. And if it doesn't come, it doesn't come. Okay, finally for MSOs, I do not know why we had a gap down, but we're right back to testing this black dirt breakdown structure here. This black dirt breakdown structure is obviously super key, because if you break down under it, it's right back to black dirt. But we are currently just balancing under this guy, looking at this as one unit, and over this guy. So we're right back to being in the location that we like, but the oscillators are not yet extended. So personally, I would prefer to see some lower lows into this area, into our trade zone, before initiating any plays, because ideally you'll have both of these guys extended. So that's it. I'm gonna sign off now because I feel terrible. Oh, I wait. Okay. So I got a comment about liking seeing what the trade report actually entailed. So the trade report is 2 novel ideas sent to you every week, in addition to updates for any prior ideas, and I will send you live updates. Oops. For any trades that I do take. I do not take all the novel ideas, but of the ideas that I do take, I will send you updates for each one of those actions. And you can sort out all those updates per ticker by the ticker, because obviously many folks are, people decide what they want to trade, obviously. So this is what you can expect from the swing report. There's going to be a specific action alert for every single action that I take, or that the Dan man takes. You can filter out Dan's comments as well. And PSA was one of our recent ones. Lately, I've been kind of pivoting towards I only really want to take trades that I also want to hold for the longer term. PSA is actually not really one of those trades, but the technical setup was really great. And so this was the original trade idea. You can see how the first alert came through on May 23rd, just a few days after the report published it on May 20th. And this is our bigger picture trade zone. If you had used it completely blindly, just trade it as is, you'd be fine. And you have obviously a runner. I'm very happy with the management of this, because I also got an ad onto it over here, and that was on July 31st. So you can see that alert. This is just the original initiating. So we're initiating on the way down. And then I also reserved some risk capital to include an ad, because I'm trying to accommodate for all folks. Some folks, they like to scale in over a long period of time, or a larger range, right? They like to buy into the weakness, and they like a more less active approach, right? I know one fellow who goes camping all across America and doesn't always have reception. So I do 2 kind of styles for the report. One is like a scaling in approach, and then I reserve half of the risk capital to add once the trade gets going. So it took some time for the trade to come to set up for an ad exactly how I wanted it, but it does on the July 31st, which was all the way over here. So at 9:37, I sent out that alert that I added that position off of this 289.77 level, which is just this point of control. I guess it's a little, oh, I'm sorry. It was this point of control over here off of this guy. This guy sitting on top of all of that. 289.77 was the POC of this structure over here. So I just thought, okay, I'm going to add off of that. Obviously, it's off by a little bit right now, but I added off of that. And that was just 7 minutes into the session. So you can just see on that day, the 31st here, this is the first 15-minute candle. So somewhere in this candle, even if you bought the top, the risk was only 3%, and we are way, way, way above that now. Okay, way, way above that now. So anyway, that's just a little taste of what you can expect from the swing report. Again, it's not, I don't take every single idea. It's not a signal service. We're not trying to, have you follow along per se, right? We want you to understand the actions that we do so that you can replicate them for yourself. Of course, if people do decide to trade along with the alerts, that's up to you. Obviously we're fine with that, but the goal of our publication is to teach you how to fish, not to throw you a fish. So, although we do throw you fish. So, anyway, that's pretty much it. If you made it this far and you got anything out of this video, we would appreciate a like or subscribe. Helps us out a lot. Costs you nothing. Lets us know to keep doing content like this in the way that we do it. And if you, don't, that's fine. If you think, if you have any recommendations, always happy to hear it in the comments. Let me know. Otherwise, I appreciate you sharing some of your time and energy with me. Hope you enjoy the rest of your week, and I hope to see y'all next week. Farewell.